Management video blog. Seiler, and today is Tuesday, August 9th. And, last week was a pretty flat week in the market, although we drifted. I'd say we drifted higher. And earnings clearly have helped this momentum continue. We are done with earnings season, so it's all about rotation. And we're seeing a lot of sectors come in and out of favor. And all of a sudden, last week we saw the financials get frisky again. And why is that? Well, because we had a blowout jobs number on Friday. Remember, the employment report comes out the first Friday of the month. And it came out on Friday for July, and it absolutely blew out expectations. So when you see that, Wall Street starts thinking, okay, the economy's back on track. That one jobs report in June was an anomaly. And when that happens and the economy starts looking better, the Fed starts thinking, well, let's get back on track on the path to raising interest rates. So what sector really benefits from higher interest rates? The financials. So we saw the financials get a little frisky, all of them across the board, whether it's regionals or the big money centers. So all doing fairly well right now. I think that's going to continue, especially since we have a 10-year Treasury yield that has dropped significantly down about 1.55 or so. That's pretty low considering we were not too long ago, we were about 2% or above. And remember, when rates start going back up, the price of the bonds go down, and it's great for financials and interest-sensitive type investments. We also saw the healthcare stocks get a little frisky again. Biotechs continue to be pretty strong, had a little bit of a pullback, but since I made that call several weeks ago, acting extremely well. Small cap doing well. So, we have some sectors that are rotating. However, we also have some money coming out of certain sectors, and the transport's having a little bit of a problem. And transports typically can dictate how the Dow Jones moves, which can dictate some of the rest of the market. So, look, I think we are in a very cautionary time, and I think that valuations in the stock market are a little stretched right now, especially since, yes, earnings were better, but were they really better? Were they organic growth? No, it wasn't. It was basically cost cutting and stock buybacks that increased earnings. So that's what we have to be careful of. Also, one thing you have to look at, and this is something that's a little bit technical, but the volatility index, there has been really virtually no volatility. The VIX index is trading over 11. When that VIX gets about 10.5, it's almost a sure thing the market's going lower. And there's no such sure things in life, but it seems like based on history, again, history is no way indicative of what's going to happen in the future. But typically when that VIX index gets down to that 10.5 range, we got a short-term problem, and we have certainly a short-term top. So let's keep an eye on that. Also, Thursday, last Thursday we had the Seiler Wealth Management halftime report. We talked about what went on the first 6 months of the year, what we think is going to go on going forward with the election, with the potential for recession, a lot of great things, and some strategies that we talk about, including alternative investments. And that's something that really has to be in your portfolio. I was watching a commercial the other day, and it used to be traditional allocation was 60-40, 60% stocks, 40% bonds. But now they're talking 50-30-20. I just saw a commercial saying, hey, I have 50% stocks, 30% bonds, 20% alternatives. And why is that? Well, because I'll explain to you again. An alternative is anything except for a stock, a bond, or cash. So like the examples I've used can be a commodity, can be a piece of artwork, could be classic cars, could be coins, could be whatever. But those type of investments don't really care what the stock market does. And so what that does, it lowers the volatility of your portfolio, and many of those are getting exceptional returns. Many alternative asset classes doing exceptionally well, especially for the income investor. And if you are out there in pre-retirement or retirement age and looking for income, these are pretty good places and good sources to receive it. So we're going to talk about that in my event. It's the 2016 halftime report. This will be the last time I do it, which is Thursday night, and that would be August 11th at 7 p.m. sharp. Click on the link below, or you can go to my website, stockdr.com, and sign up for the event. So go to the stockdr.com events page and sign up, and I will see you on the webinar. You can do it from the comforts of your own home. So yesterday, markets were fairly mixed. I mean, the Dow was up, S&P was down. We'll see what happens today. We're indicating a slightly higher opening, but again, caution. Have your finger on the sell button and be ready. I'm not telling you to certainly not sell anything, but if you have profits out there, be ready to take some. All right, just in case. Get your powder dry, be ready to go because there will be opportunities out there once again. And I do think we'll go through a little bit of a swoon here. Not a major correction, but a swoon. I certainly could see 4 or 5%. In fact, I hope to see 4 or 5%. Really would. I'd rather see that than us here drifting along with really little trading ranges. All right, I'm Lee Seiler. Don't forget, Thursday, 2016 halftime report. I'll be on Thursday, give you another webinar. Share this webinar, please. Share it. It's great information. A lot of people are using it. We're getting a lot of people contact us. And give us a call if you need to go over your portfolio. We have our financial plans. We are caught up now in financial plans, and I got some great new software. So if you want to figure out where you are and what you need to do to get to where you want to be, it's a great way to do it. We do offer that out to clients. If you're not a client, we can work something out. All right? Hey, I'm Lee Seiler. Thank you very much. Hope everybody has a fantastic day.